Selling of stocks and a late Friday session looks quite ominous. Junk that also dropped below the first support this week. Gold is using dollar weakness to bounce a little bit, while I think oil could push towards the low 80s at least. And we will look at two trades, Cipher mining and Riot blockchain or Riot systems. As cryptos moved higher. Congratulations on those, so stay tuned until the end. This is Alexander with MasterChartsTrading.com. This is my market recap. I'm recording it late on July 8th, 2023 on Saturday. Please don't forget to like, share, and comment on this video. It will help me tremendously to promote them. If you are not yet a subscriber, head over to the link in the description, MasterChartsTrading.com, and sign up for this week. And as always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart, the green, blue, red, and yellow lines. And you can find out more about them by going to the link in the description. Right now, we're looking at S&P 500. This is a TradingView.com interface. So this black background is TradingView.com interface. This is a free interface. If you want to have my indicators, you need to sign up on my site, and I will open the door for you. S&P 500. This is an actual index, SPX. You can see it is called this one SPX, and make sure you choose the one that's CBOE. We hit 52-week high last week. We actually closed at the 52-week high on Monday, the 3rd of July of this week. 4th of July, there was no trading. 3rd of July was also a short day. The important, I think, action happened actually on Friday. So let's look at Friday in a little bit more detail. So notice this candlestick on Friday. It is basically a shooting star candlestick or a falling star candlestick. So notice that we have a large tail at the top. There is and the real body is at the bottom of the candlestick. So what happened? We opened right there. We read left to right. We opened at 44.04. Sometime during the day we spiked higher towards as high as 44.40, and we closed at 43.98. So this is not a great looking candlestick because it shows that there's at least resistance at the top here, where the tail at the top, this tail is located. This means that throughout the trading session, initially there was bullish sentiment, or people who think that stocks will go higher prevailed, and then by the end of the session, they completely lost out, and the close was below the open. So notice that the candlestick is red. That means that the close was below the open. Let's look at the same candlestick on a 5-minute chart. So for this, I'm using this symbol SPX 500, and this is a contract for difference, so you can look for those as well. It's called CFD, contract for difference. This is a continuous contract. You can also look at SPX, but notice that there's not data, intraday data. So we need to look at entire. You can look at futures, so we can do ES1 exclamation point. Which is also a possibility, so we can use that. We can also use contract for difference, and I find that contract for difference, in this case SPX 500, is a good symbol to look at. So this is what happened on Friday. So notice that we moved higher throughout the day, and it looked really good. All we needed to do is just continue throughout the day and close at the high. No, what happened is we had a significant push lower. We basically gave everything that we opened and we closed lower. We opened slightly higher than we closed. So it means that not only all of the gains were given up, there were a loss at the end of the day. So this is a very not very reassuring candlestick at all. This price action is to me, it doesn't look good at all. So right now, I mean, we made a new 52-week high. So actually, if you listen to my previous video, I was saying that we were somewhat oversold last week, and we indeed moved towards new highs, made the 52-week high, and I think now potentially we're maybe seeing a double top. Potentially, but double top. Last week, I think a week before that, I talked about how there were too many calls. Too many people are thinking that the stock market will continue higher. I think this is the time a correction might just unfold. Long-term stocks are in the uptrend; they're bullish, but short-term we might see a pullback. Pullback targets are level number one is around 42.96. This is my green line, and I think a nice, sizable correction would be to see a pullback towards the blue line, so towards around 40.95. So I think if we get to 40.95, from today's levels, that's about 7% down, I would become extremely interested in buying S&P 500. Notice around the blue line is where we had a breakout in April of this year. So by then we will see a significantly oversold security within a bigger uptrend. Okay, oversold within a bigger uptrend is where you want to be buying. High yield bonds, JNK. I always look at high yield bonds because it is important if you trade S&P 500, if you trade stocks. So on this chart, this is a weekly JNK. Notice the lower part here is mostly, this is a correlation coefficient in yellow here down below. The correlation coefficient for junk debt and S&P 500 is quite positive. Currently it's at 0.83. In other words, 83% of the instances S&P 500 is doing the same thing as junk debt. So so far high yield bonds have not made a new high, or they have not made a 52-week high. So notice that the 52-week high would be just a tad bit higher. We haven't gotten there yet. Notice that S&P 500 indeed made a 52-week high. So this divergence is not exactly the best thing to have. Ideally, we should see junk debt, make a 52-week high. It hasn't happened yet. So right now, notice that high yield bonds actually also made a high for the move on last Friday and then pulled back. Additionally, on Friday, we were looking at, on Thursday, there was a significant gap down for junk debt and closed below this green line. That means the first support, we're at first support, currently at first support. Additionally, notice this candle from Friday. It spiked higher, but then still closed right below this green line. So there is right now resistance around this area. Potentially, we're looking at a double top. There's a double top. Maybe we'll make a triple top, and then we'll see something like a head and shoulders kind of business, something like that. If we break below that level, then at least a somewhat significant push lower will unfold. But maybe even that's it. Maybe this is the double top, and then we at least pull back towards the second support. So second support for junk debt is, not that far away. It's about 2% or so. So 2% for junk debt would roughly translate to around 6 to 7% of a pullback for stocks for S&P 500. This is a reasonable kind of normal sort of pullback, and it's just like a healthy kind of thing. Is it possible that we are not going to get a pullback? Yeah, absolutely. We just don't. We just continue higher from here. But the indications are that there is a pullback that's brewing for sure. to me that looks quite likely right now that the pullback will unfold within the next few weeks. Looking at a different security altogether, this is dollar index DXY. DXY is the symbol, dollar currency index. We can't really trade this particular security in the United States. We can trade UUP in the United States. But if you're going to be analyzing the dollar, make sure you analyze the underlying, in this case DXY. So DXY is currently in a downtrend. Dollar is in a downtrend. We hit the lows here in February, retested the same lows in April and May, and rallied off of them. So right now we have a higher low that was made here in June, and I thought that we're just going to continue higher. However, it seems that we're now reaffirming resistance at this yellow support resistance line where I'm hovering at around 103.1. Especially on Friday, notice this big red candlestick push down. So this is not a good looking candle at all. I mean, big red candle. I mean, can't get any worse really. So we're waiting basically. I mean, unless we hold at this lows from June, then a retest of the February lows is really quite likely. This white line is where I just kind of drew it in. This is February lows. Then if we don't hold that support at February lows, then we can kind of look on the weekly chart and see how far. Yeah, I already mentioned this one before. So this is the same yellow line right there. I'm sorry, same white line right there. Same. So this is the February lows right there, and we tested it several times here in June, May, and again, it seems like there's a good chance we're going to retest those lows. So if we do retest those lows, then notice this depth of the pattern. The pattern began in February, at the lows in February, and the top in early March. So that's depth of this pattern is almost 5%. If we break below those lows, then we can anticipate around 5% down for the dollar. So the reason why I explain dollar is because we trade gold. So notice on this chart XAU divided by USD. So if gold, the lower part of this equation, will get bigger, more powerful, will continue higher, then it will pull this currency pair lower and gold will depreciate. Vice versa, if dollar will actually get cheaper, it will allow the gold to continue higher. So right now gold is oversold within a bigger uptrend. So oversold, gold began its uptrend right there where I'm hovering on January 13th of this year, and it hit almost all-time record highs right there in May. Now we're pulling back and we're at this blue support resistance line, and we are literally oversold within a bigger uptrend. I would be buying right now. However, I'm looking at the dollar and I'm not so certain what's going to happen. So dollar really is quite important. Ideally, if we break below these lows, then we should be just buying gold immediately. If we don't, if we kind of hold here and rally, I still think that there's quite a good chance for dollar to rally towards this, at least towards this red support resistance line. So if dollar continues to rally, around 3 to 4%, then gold will come under pressure. We're looking at a somewhat significant pullback for gold should dollar not drop or move higher. We're looking at like 7% drop for gold. At that point, if gold continues lower towards 1784, this is the red line, I'm reading it right off the chart, then we will question the entire uptrend for gold premise. So all eyes are really on the dollar. If dollar holds, then gold, may, if dollar doesn't drop, then gold could continue. If dollar does rally, then gold will come under pressure. If dollar drops, then gold could continue higher. So we'll see what happens basically at this point. And I mean, if dollar strengthens, then gold will come into pressure. So we'll see what happens, and we'll basically watch the dollar at this point really pretty closely. Briefly, let's look at oil, CL1 exclamation point. So we saw lows here for oil back in May, March and May. Actually, let's look at the weekly chart for oil. So here's the weekly chart for oil, the lows from March and then lows from May around $64 or so. This is light crude oil. So Brent is very similar. So far, the support has more or less held. And I mean, you can see we have this low here in late May, mid-June, another low in late June, and now finally a rally. So we have like a multi bottom here. So quadruple or possibly quintuple bottom if you count the March and the early May lows. So if I'm correct, then we're looking at a rally towards the red line, which is around $80 right now, $79 or $80. However, just notice the way the indicators are projected to behave. They are kind of coming closer together in the future, projected to be coming closer together. Notice how far apart they're right here, as late as June. And when they come this close together, that means that there is a bigger chance of a reversal that's possible. So what's exactly happening with oil? Don't exactly know, but there's a chance some sort of a oil shock, a potential oil shock is coming, because lower prices were not achieved and higher prices are becoming more and more probable in the near term. So I'm really hoping nothing of nuclear nature happens, but we cannot exclude it. Moving on to Bitcoin and cryptos. So looking at Bitcoin right now, Bitcoin rallied from the lows. Notice where it rallied from, at the blue line, exactly. We bottomed exactly at the blue line, around 2,500 or so, and then rallied. So if anything, my indicators are very easy to read, and you can see exactly where you want to be buying. If we have an uptrend in security, we want to wait for a pullback towards the blue line, just buy it right there. So Bitcoin, if you were able to get in at around 2,500 or so, now it's around 31,000. I'm sorry, 25,000. You're about a few percentage points. How many percent is that? So a 17% move. It's pretty nice. I unfortunately wasn't able to get in on the Bitcoin. I was able to get in on Ethereum. So I was able to get in right around the blue line at around 1774. My target was a few percentage points higher. We'll look at average true range, ATR. So ATR is an indicator. It's free, ATR. Average true range. It just shows you how much does the security move on average, up or down. So at the time of my entry, the security, in this case Ethereum, moved around $65. I'm just reading it right off the chart right there. So 2 times average true range is around $120. So when I got in at 1774, my target was there. Two average true ranges. So my target was reached a few days, literally like the same day after when I entered, and I moved my stop to entry. Right now, we're just kind of trading sideways, but I think there is a bullish bias for cryptos. I think, obviously, I think that we're going to go higher with cryptos. Will we get another chance to get in? Maybe, yeah, it's possible. I mean, especially with Bitcoin, it sort of feels a bit overextended. Bitcoin looks stronger than Ethereum at this point. I mean, notice that price of Bitcoin is higher than green line. Ethereum is still below the green line. So ideally, Ethereum should break above the green line as well. At that point, I think we'll be looking at new highs. There's the high for the move from the April. It's possible we'll just break higher, and we should see a significant upside at that point. Perhaps that's the reason why some of the miners are also feeling this, and this is Cipher mining. I had a position, I bought it at $2.39. Unfortunately, I got stopped out literally the day before it popped higher, but I did send another alert for my subscribers right there on the 6th of June. So if you didn't get stopped out, then you're up 79%. The alert was sent at around $2.35. It's currently at over $4. Well, it went as high as $4. So Cipher mining, big congratulations if you're a subscriber. Again, the way I mean, I didn't really know anything about the stock, but simply using my indicators is pretty obvious where the breakout occurred. So notice right there where I'm hovering, I just put an arrow there on 10th of April 2023 of this year. We saw a close above the blue line. That's all I really need to know. That's where the breakout occurred for Cipher mining. At this point, any pullback towards the blue line would have been a great buying opportunity, which is exactly what we did. Right around the blue line, we were able to get in, and now you're very significantly higher than you were when you entered. So again, congratulations. And another Bitcoin miner or crypto miner. This is called Riot Platforms. It used to be called Riot Blockchain. Again, I don't really know anything about anything. I just look at the indicators. So this security was really trading next to the lows. These are, I believe, 52-week lows. Actually, well, no, 52-week lows, but not all-time lows. And then something happened, and right there where I'm hovering on 11th of April of this year, 2023, we saw a move above this blue support resistance line. Really, at this point, is all we really needed to know is, that we're now in an uptrend. So any pullback towards the blue line would have been a good buying opportunity. I did send an alert to my subscribers on 6th of June of this year. You had a couple more opportunities a few days later, and then finally it popped over the past 4 days or so. So if you get into Riot Platforms around 6th of June or even a little bit later, you're up 42%. Again, congratulations if you are a subscriber. If you are not yet a subscriber, head over to MasterChartsTrading.com. You can find the link in the description. Click on sign up for one of the products. So once again, the trading indicators are these lines in the chart. They will help you tremendously with opening and closing positions. They are available for TradingView.com. It's very easy. I will explain everything. Just sign up and have a free TradingView account, but sign up on my site, and then I'll open the door for you. You can also get my newsletters. I send out a daily newsletter and a weekly members-only newsletter where I cover many securities. For example, this week we will cover all of these various stocks. We have ETFs, we have bond ETFs, international ETFs, as well as large cap stocks like Goldman Sachs, Nike, Exxon. We have gold miners that we cover. Also, we cover quite a bit of speculative stocks. For example, Amneal Pharma, CleanSpark, IonQ, in which I still have a position, Opco Health, Wayfair, looks really interesting, Stratasys, Snowflakes, Skynexus, etc. So if you're not yet a subscriber, consider signing up. Thank you for watching. Again, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Thank you for watching, and have another great trading week. Bye-bye.